and thank you all for joining us today and for taking the time to be here. I am Elise, I'm Head of Marketing here at NS Global, and I'm going to be the host today. Just as a quick disclaimer, today the webinar is going to be recorded, so just bear that in mind, and also it is always important to source your own independent advice. Today's discussion will be focused on key considerations for US nationals and residents looking to invest in the UK. And our panel has prepared a series of core questions to guide us through the session. Thank you to those who have submitted questions as well. We will be getting back to you following the webinar should we not tick those off today. Before we begin, I'd like to invite the panelists to introduce themselves. So Chris, I will come to you first, and you can do the honours of explaining what it is that you and I do at NS.
Wonderful, and thanks for the introduction. Hello everyone, thank you so much for joining today. Really nice to be talking to you all. My name is Chris Lloyd. I'm Head of Private Clients at NS, and to give you a little bit of a summary of what we do at NS, we are your absolute go-to for international clients based virtually anywhere in the world looking to buy, refinance property in the UK, ranging from residential, buy-to-let, commercial lending, and much more. We can also help clients as well purchase properties overseas as well, and obtain various other different financing types, anything from art collections, watches, or even to lending to companies. But what we want to talk to you about today is going to be predominantly US clients and how they can obtain mortgages when purchasing in the UK. And as we go through the questions, I'll tell you a lot more about that. But in a nutshell, that's me, and that's what we do at NS.
Great, thank you. And Luca, over to you.
Yeah, hi, I'm Luca. I'm a senior wealth executive here at Mosaico. We were established in 2008 as a specialist US UK wealth manager focused on those connected internationally.
Perfect. And Louise?
Yeah, hi, I'm Louise Palmer from Osberg Sinclair & Co. We are a US and UK tax advisory firm, and I'm a partner sitting in the trust, estate and family team. So the majority of what I see are the tax complexities with individuals or trustees that have some sort of link to a structure, but we have others in the team that look after corporate entities or anything really that just has a sort of US tax touch point, and we really focus on the complexities of where we're needing to deal with both the US and the UK jurisdiction at the same time.
Thank you. And Remy, over to you.
Hi everyone, my name is Remy. I work for a company called DDRE, and we specialise in the acquisition and sale of best-in-class real estate across sort of the prime and super prime market in central London generally, but we will go out to sort of prime areas of the countryside or wherever our clients need us.
Perfect. And Steve, please.
Hi everybody, good morning, afternoon or evening, depending on where you're coming from. But yeah, my name is Steve. I work for a company called Lumon, and we're in essence a very property savvy currency broker. So we've been helping people move money around the world around property transactions for 25 years, and we transfer about 25 million a day. So we're on for about 10 billion this year. And in essence, we help clients with offering better rates and better service than that of the banks. So that allows money to go a little bit further. And we also offer a number of tools to help people manage currency risk, which we're in particular demand for from a lot of Americans at the moment, with how the currency market is moving, and therefore how many bedrooms the property might have. It can have that much of an impact, but I'm assuming we'll get some questions on that later. Thanks for having me.
Perfect, welcome. And Sophie, last but not least, over to you.
Thank you very much. I'm really delighted to be on the panel today. I'm Sophie Burt-Brown from a law firm called Law Divine Immigration, as the name might suggest. We're a specialist in the world of immigration, and we focus specifically on UK and US immigration from anywhere in the world, but inbound into those locations. I've been practicing for nearly 30 years, and my focus is UK inbound.
Great, thank you. Right, I'll jump straight into the questions. And Chris, I'm going to start with you. The first one being, can I obtain a mortgage in the UK if I'm a US national and I've never lived in the UK before?
Yes, you absolutely can. And this is a very typical client for us at NS Global, particularly as well with everything that's been going on in the last few years. We've seen a significant uplift of US clients looking to move to the UK. Often that's because they're looking to establish the UK side of the business, or they're sending children to school here, or they just might want to come to London just for the sort of lifestyle, etc. here, and start building the family and the asset base here. So where clients often come to us is because they haven't been able to get a mortgage via a standard lender in the UK. Often the high street banks and the more mainstream lenders, they will only lend to clients that have been resident in the UK for the last 2 to 3 years, have indefinitely to remain, and they'll want you to already have a credit sort of credit footprint here, have banking relationships, and that's just not the case for a lot of our clients. So we get a lot of clients come to us that haven't lived in the UK before, and a lot of their earnings and wealth are all in a foreign currency, typically US dollars. So where we're able to assist is we have access to the entire lending market, so not just the high street banks, but also the specialist lenders and the private and investment banks. These lenders are a lot more sophisticated, and they will look at a client's overall wealth position and their foreign currency income. And as long as they can get comfortable that they can service the mortgage payments from, even if it's US dollar income or wealth in the background that's in a foreign currency, then they are comfortable lending a mortgage. So it doesn't really mean that they need to have had any kind of footprint here before. And often if we're putting a client with a private bank in the UK, then we can open a bank account for the client as well to assist them in getting a mortgage here and just starting that credit footprint and financial platform here.
Great, thank you. And I know that you've just touched on it there, but the next question would be, can I get a mortgage in the UK if I don't have regular income and also assets held in a foreign currency?
So again, this can be quite often the case with a lot of our international and US clients. We may say have a client that had a liquidity event, maybe they've sold a business and they don't have that regular income anymore, or they're an actor or an actress, or say they've previously done a lot of work, but in recent years or months, they haven't had that regular income source. So then we're very much reliant on their liquidity or potentially a property portfolio in the background to be able to support the mortgage payments. Now, again, with a standard lender, maybe a high street bank, they'll want to see 3 months pay slips, last 3 years tax returns to see that a client has a steady income, and then they'll typically give you a multiple of that. It's just not really the case with a lot of clients, especially on the entrepreneurial side, again, also with the foreign nationals. So we've got sophisticated lenders that can look at a client's overall investment portfolio or wealth position, even if it's held in a foreign currency, and say that they could potentially, if they needed to, either liquidate that, or from the interest that's earned on that portfolio, they could then be able to service the monthly payments and meet their lifestyle costs of the new property purchase in the UK from that wealth in the background. Also, even if they were looking to stay overseas and maintain a residence overseas and then just buy a property in the UK, albeit for visiting family here or sending their children to school, then as long as we can evidence that the client could support their lifestyle costs over in the US and in the UK, then we could look at getting them a mortgage as well with predominantly private banks.
Great. And what sort of loan to value would we typically be seeing?
Loan to value wise, again, this is always a preference to get a higher loan to value for clients that are based overseas. Often they don't want to bring too many of their funds over to the UK for tax purposes, or just that they want to keep funds overseas. Now, with that, we can then look to get higher loan to values. A case actually I worked with on Remy. So we had a client that was looking to move to the UK, but they wanted to keep their savings overseas. So we were able to get them 85% loan to value, against a property that was around 3 million, and that's sort of, you know, can be the case for a higher value property as well. I recently did an 11 million pound purchase, and we managed to get the client 80% loan to value. So we can look at obtaining those high loan to values for clients. Ultimately, it keeps their cash flow much better as well, and they can often use that money to work harder elsewhere.
Great, thank you for that. Luca, over to you. So what are the common pitfalls of investing as an American living in the UK?
Thanks, Elise. Yeah, so more broadly, considering the financial pitfalls, there are some common themes: misunderstanding the dual tax system, so the different tax years between the US and the UK. Secondly, holding tax inefficient investments from a US standpoint. A common misstep we see there involves such investments as non-US mutual funds or pooled investment vehicles, which are generally subject to punitive taxes from a US perspective. As it relates to UK individuals, common UK investments such as open-ended investment companies or unit trusts often fall into this category. So it is important to do a health check, if you like, of existing investments. Together with that, another is holding tax inefficient investments from a UK perspective. So the UK can impose high taxes on certain US investment products. Many US mutual funds and ETFs, for example, that don't have UK reporting fund status can often lead to a punitive tax treatment from a UK standpoint. And you know, the important thing to talk about there is that thresholds for the additional tax rate or the highest income tax rate in the UK kick in much lower than they do in the US. Finally, misusing some products such as UK investment wrappers is a common pitfall we see. So ISAs are generally looked through from a US perspective, whereas they're wrapped in the UK. Ultimately, it comes down to getting the right advice and setting up the right structures pre or upon arrival.
Great, thank you. And are there any currency risks associated with investing in the UK?
Yeah, this has been a particularly salient point in the markets this year with the depreciation in the value of the dollar, and it's important to manage currency considerations in line with your overall financial plan. Currency risk is one of those that there isn't really a one-size-fits-all approach. It's very, very case-by-case specific. So, you know, for multi-jurisdictional families with dual currency liabilities, matching the currency of cash flow, so the currency of your outgoings, becomes quite complex. It might be prudent in some instances to structure finances to allow for periodic currency conversions or take a holistic view of your income, assets, and expenditure and identify where that risk is present. There's also several different ways of viewing currency risks depending on one's situation. Tax considerations, as ever, are also crucial. You know, from a UK standpoint, you know, GBP needs to be considered. From a US standpoint, USD, and both jurisdictions have different methods of calculating cost basis on investments, which certainly adds to the complexity. So yeah, as ever, it's about getting the right advice and having tailored advice to your situation.
Yeah, for sure. Okay, thank you. Louise, do you think that last week's budget will affect the inflow of US nationals purchasing UK property at all?
So before the budget, we saw a constant heavy and healthy and heavy flow of US individuals purchasing in the UK. The UK will always be an attractive place for Americans to buy, especially if they live or have come from some high tax states. And like what Chris touched on, the UK has that the sort of business, culture and education side, which does attract people. And I also don't quite think the Trump effect has finished pushing people over here. Certainly leading up to the budget, it slowed down, and for our US client base, we saw a somewhat stagnant phase of people purchasing. I think a lot of people were waiting on the speculated changes to capital gains tax rates, changes to stamp duty, a so-called mansion tax, and if any changes were going to be made to principal private residence relief. So looking at the budget and what aspects of that could potentially affect US purchases, let's go to that mansion tax. So that's supposedly coming in April 2028. And what this sort of does is suddenly open the door to a sort of value-based taxation, which is a slight concern for our clients. The mansion tax will apply to all property, so whether that's used personally or purchased to rent out. What's not clear is whether it will capture sort of corporate structures that own residential property, so there's more to be discussed on that. The tax applies when property is worth over 2 million, and the tax that is potentially applicable will be capped at 7k. What's also not clear is whether, let's say, someone purchases 10 properties all worth 1.5 million, have they escaped it? So this extra expense, if US people do purchase over 2 million, is obviously something that they're going to have to take into account. But when you consider what taxes and what expenditure is involved for US people if they purchased in the US, it's probably likely still worth purchasing. The US have a really high annual US estate real estate tax to pay. So when comparing that to this possible mansion tax coming in, it's probably still likely that the mansion tax won't be too much of a bother. I mean, there's a lot of talk whether that mansion tax is still going to come in, so we'll see. Then next, there's an extra 2% tax on rental profits from April 2027. So clearly that's a direct additional UK tax burden if they're going to purchase property to rent out. And then lastly, there was mention of the tax offer for high talent new arrivals. So what that looks like is the UK are going to be accepting the need to reform the limited immigration options and restricted FIG regime in order to attract some more global mobile individuals to live and spend and invest in the UK. So overall, in short, no. We're not really expecting too much of a change in our US clients purchasing property if we sort of go back to the pre-budget lull.
Sure, yeah, to be honest, I think there's been quite a lot of chat about that. We were speaking a moment ago about how we thought the budget was actually going to be a lot worse than it actually was. So no, good to hear. Are there any common taxation issues you see with US nationals purchasing in the UK?
Yeah, so I'll sort of cover the main things, and the most common issues we see are in relation to stamp duty, the US concept of depreciation, and the treatment of foreign mortgages. So with stamp duty, some US clients are somewhat unaware of this additional sort of burden on them purchasing property in the UK. And if we're talking a property that's high value and more than likely a second property, you know, part of that purchase can hit into the 17% rate. So if you're looking to purchase property and hold it for a considerable amount of time, that burden becomes less of an issue, especially again, as I mentioned, their annual real estate tax expense is quite high. And that's also when you take into account the sort of council tax expense you've got here as well. It's still probably not too much of an issue. And stamp duty can eventually be taken as a deduction on a later disposal if it's rented in for US tax purposes. So you'll eventually get relief for it. With depreciation, so the US have a deduction for depreciation on rental properties, and that's really to account for like wear and tear on the property. And this is usually at a recoverable rate of 27.5 years. So that could mean a year's worth of depreciation wipes out any potential taxable income for US purposes. So that's what US people are very much used to seeing if they purchase rental property. The UK don't have this deduction. So if they're purchasing property in the UK and generating UK rental income, it's more than likely that they'll see that they've got no rental property income to pick up on the US side, but they are exposed to income tax in the UK on the rental income. So that's sometimes a bit of a surprise. And then lastly, just to touch on mortgages, there is this difficult concept to sort of explain to US purchasers that using foreign, so non-US mortgages, the IRS treat foreign mortgages as financial instruments. And if a US person pays off their sterling GBP mortgage for less dollars than what they borrowed in dollars, they are deemed to have made a profit, which is taxable. And consequently, if that's a loss, it's not allowable. So you could have a situation where a US person made a dollar loss on the sale of the property, yet made a dollar gain on the mortgage element. So this clearly has a direct link to exchange rates at the time of purchase, borrowing and sale. And this can catch a lot of our clients out. And US people are used to financing their property with debt. They can take a personal tax deduction on part of the debt element of purchasing property. So when they're purchasing in the US, it's really not an uncommon thing that they try and push the amount they borrow as higher than normal because of that deduction. There is options for people to get US mortgages, but they're just so expensive that we would never really see that.
Great, thank you. Right, Remy, while we're on the topic of the autumn budget, what impact do you think that's had on the UK property market?
Yeah, well, so leading on from what Louise sort of said, I think the general consensus prior to the budget was that it was going to be far worse than it actually was. So sort of pre-budget, there was a lot of stagnation and there was sort of a lull, and, you know, there was so much uncertainty that a lot of people weren't really making very many decisions. So a lot of sellers sort of held back from putting their properties to market. So I think generally what the budget has done is sort of re-stabilize things. We've sort of gone from I would say probably -10 to 0 in terms of, as opposed to 0 to 1 in terms of comfort in the market, which I think is a good thing. And people are now ready to make decisions in preparation for the new year, so we can expect some more inventory and you know, a more momentum in the market as we go into 2026. I think generally the effect on the prime and super prime market, it hasn't really had a significant effect. I think the most significant policy is the mansion tax, which Louise obviously spoke about, and in theory, sort of £7,500 for a £5 million property. It's not going to have a substantial effect on someone's decision to acquire a property, but I think particularly as we're considering US clients, it sort of introduces the idea of an annual taxation, and I think that we can expect some conversations and revisions around, you know, stamp duty tax, perhaps even an abolishment over the next couple of years, because it's clear that it's not particularly helpful for the market, and it doesn't necessarily encourage people to move when they have such large lump sums of tax to pay every time they need to upsize or downsize. So, you know, in the US, having an annual tax seems to work. It's a consistent form of income for the government, and I think that's something that we are perhaps likely to lean more towards. That's what I'd say generally. I think where we may seem to sort of have a little bit of an effect on the market is more of the core market, so perhaps sort of the 1 to 3 million range, where families are sort of your middle class family is a little bit under pressure, and, you know, with the annual tax and with other taxes that they've introduced, it's just going to make sort of disposable income a little bit trickier and tighter, and that's where you may also, you know, sort of may start to see some more opportunity in that core market where people are affected by this slight change.
Great, thank you. Yeah, I think something that we've said over at Ennis a lot is the uncertainty was the killer, which I think is probably a running theme today. Right, next, what is the buying process like in the UK compared to the US?
Well, in the UK, I think, or rather in the US, I think it's pretty straightforward. It's a very
Is Remy frozen for everyone? Yep. Okay. Well, for the moment, we'll go on to you then, Steve. What is the benefit of using a currency specialist over a bank, and why aren't they used in the US?
Hello. Great question. We do with a lot of US-based clients at the moment, as everyone else does here, and that's often a question we get asked as to what are the differences and why would I use a specialist over the bank. Generally speaking, to give some scale, we're nearly 200 people across 10 offices, as I mentioned, and we're trading the volumes that we are for a reason. So traditionally, it's offering better rates, so the rate of exchange and therefore the budget that clients can have. But a big part of that is risk mitigation and the proactive service. The simple question I ask clients a lot is, how many times has your bank rang you? We earlier on this year helped a client buy a big property in Baker Street. It was an £8 million property. The client got in contact with us, gave me a call and said a very similar question. Why would I use you over my bank? I've come across your industry but never used you. And I kind of said, well, have you told your bank that you're going to be moving 8 million over? To which the answer was yes. I told them 3 weeks ago. My simple reply was, have they rang you since? Because in that 3-week period, we've seen the market move by this much. We kind of knew it was going to happen, and it's adding another $380,000 to your cost. It was a big movement event, and that really symbolizes the amount of movement and the proactive service and therefore the value. The other biggie that we have is the products that we'll offer over that of conventional bank, and by that I mean the options of limit orders, stop loss orders, forward contracts. So all those technical products that you'll see in the wealth space, not most banks will offer from a currency perspective. So this allows clients, when they are moving forward with a purchase, to protect themselves against downward risk in the currency markets, or perhaps take advantage of the positive move so they can get more for their money. So if it brings it to light, even in the last 14 days, if you were buying a £2 million property in the UK, over the budget, it's moved 1.5%. It costs you another $30,000, timing it well or poorly in the space of the last 2 weeks. And that number only gets bigger through the course of the last 12 months, where it's moved by, 13-odd%. So it can really make a very, very sizable difference on the power of the dollar and how many pounds you're going to get for it. Hopefully that helps.
Yeah, for sure. Thank you. And what are the costs of going down this route instead of a bank?
Another good question, to be honest. Yep. Well, how we make our money is a very small difference between where we buy and where we sell our currency. So it's built into the exchange rate that we offer to a client. There's no additional invoice or bill thereafter. We're in essence basically undercutting the price on the bank as well as adding more service. So there's no cost to talk to us, to credit funds, to move funds, to hold funds. It's all at that point of execution, and we basically work at a smaller margin and offer more service than a majority of the banks, which is why we're here.
Great, thank you. Sophie, over to you. Can you give a summary of the main options for visas?
I certainly can, yes. There are actually about 70 routes, so I will not give you a summary of all of those. And around 40 of them are ones that lead to a permanent status. And so often the question is really, what's the objective for the client when they're coming to the UK? Sometimes they may actually just want to come as a visitor. I think it was Chris mentioned, some they may be purchasing a home here, perhaps because the children are going to be studying here, but they may not necessarily want to be here permanently. And clients can use sometimes just the visitor route if they're going to just be spending some of their time. But a lot of the time, what the questions that we get are around those who are wanting to relocate to the UK and spend significant time here. That may involve working in the UK, and then you're really down to a handful of routes that are the more useful ones for most individuals. So in the briefest terms, and I'll just give you a few headline points for each. For example, there are those who are coming to the UK because they are the spouse or partner of a British citizen or somebody who has settled status, a permanent resident status in the UK. And so the basics of that route involve that they are either married or they've been living together for 2 years. They have to show a certain amount of money. It's not particularly high. The challenge is in how you're allowed to show it. So it's earnings of at least £29,000 per year or savings of at least 1,500 per year, and it's a route that potentially at the moment, we may come on to this later, things are going to change for some routes, but potentially leads to indefinite leave to remain settlement in 5 years, and it gives the flexibility that it allows the person to do pretty much anything, to be working, self-employed, or nothing at all. So that is a popular one for those who have access to it. Perhaps sort of top of the tree is the global talent route. It was mentioned that, I think, Chris, again, you were talking about actors and actresses. That route's often favoured by, you know, the Oscar winners and so on, but it also serves those who are leaders in the tech industry, science and humanities, even more on the academic side. So that can be a really fantastic route, and that can lead to a permanent status within only 3 years. And it has a degree of flexibility around work. People have to be pursuing their field, but there's no sort of minimum income. So that can be a really fantastic route for those who meet it. The skilled worker route is one of the most commonly used. That's a sponsored route, so it requires that there's an employer in the UK who's going to sponsor the worker, and there are minimum skill and salary levels. It's around £41,000 for the minimum salary level. Higher for certain occupations, it can be a lot higher, but that's the sort of baseline. Again, that's a route that can lead to settlement in 5 years at the moment, but it ties the person to their particular sponsor, so it is more limiting for clients. Similar to the skilled worker, we have a route called expansion worker. We do that quite a lot with US clients, where there's a US company that's setting up for the first time in the UK as a branch or subsidiary. So that can be a good avenue for senior executives who are coming to set up the business in the UK. But time spent in that route doesn't lead to a permanent status, and they'll have to switch into something like the skilled worker. The other one that's often worth a mention is the innovator founder, for those entrepreneurial types that are going to set up a new business in the UK, and that requires that they have a business plan for that business, that it's going to be innovative, viable and scalable, and it requires endorsement from an endorsing body to confirm that. But again, that has the potential to lead to a permanent status within a 3-year period. So it can be an attractive option for those who fit that quite high bar of innovative, viable and scalable. But we do have many other routes that we see a lot of our US national clients using for the sort of younger clients. There's a route specifically for graduates who graduated from the top 100 universities in the last 5 years, and quite a number of those institutions are in the US. So we see residents of the US and nationals of the US using that one quite a lot. And even things like UK ancestry, it's for Commonwealth citizens, which US nationals are not, but quite a lot of our US clients may also perhaps have, say, Canadian nationality. And so that's a route that can be used as well. So those are probably the sort of top ones that I would identify.
Great, thank you. Can you give some information on the timelines and also the process, please?
Good question, and the answer is the very annoying lawyer's answer of it depends. So there's quite a lot of variation. I mean, there are some routes where you could even get a decision within 24 hours of submitting an application, so it can be very, very fast. There are others where it involves multiple stages, and so, for example, even with the skilled worker route, if the organisation already has a sponsor license, they have certificates of sponsorship at the ready, you know, that's a case where it could end up being very, very quick. It could be in one of those 24-hour type scenarios. But equally, it could be at the other end of the spectrum, where an application has to be made for a license and multiple steps have to be followed, and you could be looking at then, say, sort of a 3-month window. Similarly, global talent, if you are at the very, very top of the tree, back to the Oscar winners, there's a simplified process. You could be looking at that very fast, a matter of days turnaround. Others will need to go through an endorsement process that will take 8 weeks, and then make an entry clearance application afterwards. So unfortunately, there isn't one nice short answer to that. It is going to depend, and the process will depend as well, subject to the particular category that they're applying under.
Great, thank you. Remy, we lost you for a second, but if we go back to you, what is a buying?
Just unmute myself. Sorry about that. I just
That's okay.
I decided to conveniently go off in the office at the time that I decided to speak, so that was great. Apologies.
All good, all good. Yeah, next one. What's the buying process like in the UK compared to the US?
Right. So I think What I would say the largest difference is that in the US, everything is very structured. It's very regulated. You know, sort of when you submit an offer, that is your offer, and it's pretty binding, and the process starts. Whereas in the UK, we have very, very loose regulation around sort of acquisition of real estate. And in the US, you're used to being sort of guided by one person who will represent you and who can sort of make sure that everything is in place with you. Whereas in the UK, it's far less structured. So I think the main shock that many US buyers do have when they come to London is coming to London and then sort of met with the market that they at first tend to navigate themselves, and they find it's an absolute nightmare, and they sort of seek out representation, because I think that it's very useful to have somebody on your side who is advising you and making sure that you're buying the right thing, and also you have somebody with your best interests at heart. So I think in the US, you're sort of used to that service and that standard around somebody making sure that you have everything said and you're buying the right thing. And in the UK, it's a little less structured in that way. So I think that's the main difference in terms of the acquisition process. Obviously, you do pay, like you mentioned, an annual tax in the UK and in the US, but in the UK, it is a sort of an upfront stamp duty tax as it stands. So that could be, correct me if I'm wrong, but I'm pretty sure that could be anything from sort of 12 to 16.5% for non-UK residents. So again, that's sometimes a shock for some US buyers. But I'd say those two things are probably the main differences between buying in the UK and in the US.
Great. And how would you say that these US nationals best prepare for their search over here in the UK?
Well, I would just say it's super important to have a good team around you, and that's from your currency expert to your tax advisor to your buying agent, to make sure that you have the right people around you, because, you know, a lot of people, I think the client Chris was speaking about previously, who we did a deal with, they tried to navigate it themselves, and they had 3 fall throughs, they lost a lot of money, and they wasted a lot of time, and that's very common. So I think it's really important to have the right team and have the right advisors around you, so you're able to navigate the market in the most efficient way and be prepared, and also maximize the opportunity you have to move when you can move. And, you know, speed is everything, so it's really important that you have a team that helps you to make the most of your situation and get you the best terms possible.
Great. And you mentioned speed there. What sort of timelines are these buyers looking at?
Sure. So in the US, as I said, it's, you know, much more regulated in terms of the acquisition process itself, and things can turn around in sort of a week or 2 weeks. In the UK, generally, it takes sort of 6 to 8 weeks on average. It would take sort of 6 to 8 weeks on average. Sometimes it can be done sort of between 2 to 4 weeks, but I'd say generally it takes a lot longer. So it's something to brace yourself for if you're used to. I just did an acquisition in Chelsea on Sloane Square, and the buyer was, I think it took us maybe 3 months, and the buyer was shocked because he's just used to turning things around very, very quickly. So I think that's something you should brace yourself for. In the UK, the legal process is quite excessive, and it's all very traditional, not very digital. So yeah, I think there's a lot of patience required, but again, if you have the right advisors, the right team, the right brokers and experts all around, then you'll be able to navigate it in the best possible way.
Yeah, couldn't agree more. Chris, the next one, can I get a guarantor mortgage if my child is living in the UK but I'm overseas?
So this is a scenario, and I touched on it a little bit beforehand, but we see it very, very frequently. We get a lot of international clients that are going to remain overseas and then send their children to school or university over in the UK. And then it's always a kind of decision, and the requirement of the client is because they'll either have family to visit here as well, or the child is then potentially going to look to stay here long term rather than just study here. So I think it's always, and London always has that pull, right? So people like to have a base here even if they're not resident here full time. So we often get clients coming to us and saying, look, it seems to make sense to buy a lot more. We've looked at the rental versus purchasing a property. We think it would be good to buy a place for our child to live in, but also I own property overseas. Can I put it in my son or daughter's name and then act as a guarantor because they don't have income yet? London property is typically high value. So, you know, if you've got somebody studying at uni, then trying to buy maybe a £1, £2, £3 million property on their income alone, if they've got part-time income, is just a non-starter. So again, what we can look at doing is a guarantor mortgage, or what's called a joint borrower sole proprietor. Very similar type of structures, but it allows you to then buy an asset in a dependent's name, or even if it was you know, wanted to buy it in, say, your partner's name, and you were going to be resident overseas, you can then maintain your lifestyle overseas, in this case in the US, and as long as your income is sufficient, or your assets is sufficient to be able to support the mortgage payments of your lifestyle in the US, and then also be able to meet the mortgage payments in the UK, then we can do, yeah, what we call a guarantor mortgage, and it just means that you then don't have to be on the deeds. And again, we don't sort of give tax advice, but could potentially allow you then to not have the higher rates of stamp duty if you already own a place elsewhere yourself, but your son or daughter doesn't own a property. So that can just be quite a key way of helping clients sort of, you know, diversify and buy assets in the UK as well for their children.
Great, thank you. Luca, what are some pre-moving tips you have for US nationals moving to the UK?
Yeah, so as with anything, it makes sense to start planning early. There are a lot of moving parts between the US and the UK. So getting affairs in order earlier rather than later is better, and ideally that happens before you move to the UK. Seek specialist guidance. I know that's becoming a running theme, but professionals who understand the US, the UK, and crucially how the two jurisdictions interact with one another. You know, it will be important to speak with them. Understand your reporting requirements. This is absolutely crucial for US expats living in the UK. It's also going to be important to do a health check or a review of your existing investments and arrangements, and understand if anything needs restructured, and you know how to go about doing that. Although that goes for moves in either direction between the US and the UK. A lot of common structures in the US often cause issues in the UK, or can cause issues in the UK. So seeking guidance on trusted corporates and that are in place in the US before you move is generally a good idea.
Great, thank you. And Louise, over to you. What do Americans need to think about when purchasing property in relation to inheritance tax?
I mean, first thing to say is UK situs property will always suffer inheritance tax. There's no getting around it. What US citizens need to consider is that their exposure to the equivalent, so US estate tax, this is really only applicable when they are worth more than $15 million. So far higher than the UK's nil rate band for inheritance tax of £325,000. And for US citizens that are worth more than 15 million, it's sort of no concern, because what will happen is the US-UK inheritance tax treaty will come in, and that additional exposure to UK inheritance tax, the treaty will just sort of shift the requirement to pay tax to the UK on that property. So it's no additional tax. Both jurisdictions are at 40%, so we're just shifting the portion on the UK property over to UK primary rights. For the individuals that are worth less than 15 million, so wouldn't ordinarily be expecting to have tax exposure on death, by owning UK property, they're now adding UK inheritance tax exposure to their estate. they could consider things like life insurance to cover the tax, and then use a trust to protect the trust payout from UK tax. And then I think lastly, it's just what is the US person wanting to use the property for? Is it renting it out, or are they using it? And if they are using it, how often are they using it? Because they're going to need to want to keep on top of their presence in the UK for maybe avoiding UK residency, because with the new rules and becoming a long-term resident, if you hit UK residency for 10 out of the last 20 tax years, you'll now bring your worldwide estate into UK inheritance tax. So for the under 15 million valued people, that's now kind of a big deal. Not only that, if you then want to leave the UK, you've got a 10-year tail of being exposed to inheritance tax. So really keeping on top of residency, days count, looking at the test is a big one as well, if the individual's planning to sort of flit in and out of the UK.
Right, thank you. Steve, can you start managing currency prior to buying, or without a local bank account?
Simple answer is yes. Yeah, most banks would need a destination account to send funds to. We're regulated across the US and the UK so that we can actually up to e-money regulations, so we can buy and hold funds for clients without a destination account, so we can do that early. Probably resonates with a quick client story if it helps. We helped an American rebuy their family home down on the South Coast earlier on this year. We were introduced at the time that they made their offer that was accepted. However, this was back in April time, so peak Trump tariff conversations, if you all remember them. We gave them the views and the opinions and the forecasts around it, and they at this point decided to take out what's called a forward contract. Forward contract in essence is a buy now, pay later option, because they had a lot of their funds coming out of investments to buy the property. The completion was I think it was end of June, beginning of July. When we did the math at that point for them, if they had bought the pounds at the time of their completion, it would have cost them another $180,000. So the maths wouldn't have added up. Surprisingly, it was their idea then, but it's all for the greater good to help them achieve that and make sure that that dream became a reality. But at the moment, with the interest rate forecasts that we're seeing out of the UK and the US is probably very likely to cut interest rates again this month, as is the UK. We're expecting 4 or 5 cuts theoretically in the next 12 months from the US, which would traditionally weaken the dollar and therefore mean that it doesn't go as far from a pound's perspective. So we get introduced to maybe 2 or 3 Americans starting this journey on a daily basis now. And last month, I can think of 2 clients which we were introduced to when they first made an inquiry on a property. And both those clients actually decided to lock in the exchange rate prior to actually coming to the UK to look for the property. So they were so risk off for it that they actually bought their currency before they bought the property, which in hindsight has been a very good thing for them. So yeah, plenty of options, more so than the banks would traditionally offer. That's why we're here. And yeah, if you're someone watching this now or back on the recording later and you're starting the journey, the currency market movement can make a significant difference. And like everyone else I'm proud to be on here with, Google doesn't count as advice. So speak to the specialists early and start the process of talking to people that do this, so that you can get the most and make sure that you don't find yourself in a problem later. But hopefully that helps.
Thanks. You're going to put me out of a job. I work in marketing. Google's half my job. Right, Sophie, can I get an investor visa for the UK?
I'm afraid that's a relatively short answer, which is no. The UK axed its investor route in 2022, very suddenly. But watch this space, because there is, and has been, mounting pressure since then. There's a real gap in our system, and the UK is very mindful of the need to try to attract inward investment. Indeed, it received a nod in the budget, as Louise was saying earlier. So there is a lot of discussion around this. The House of Lords have been looking at it recently. I gather there are discussions in Treasury, so maybe we may see that again in the future.
Great. And what are the most popular options that you're seeing at the moment, and why?
I would have to caveat the answer to that based on the changes that may be on the horizon, which I might stray into as well, if you'll indulge me. I mean, the popular routes at the moment tend to, they're based on factors that exist currently, and statistically, skilled worker is probably the most common option. But as I commented on earlier, that does tie people in to an employer, although they can move employer and apply again when they move. Global talent, although the numbers are lower, is incredibly popular with those who can access it because of the freedoms that it provides. So that really is a very popular one, and the partner route for partner and spouses. But strategically, sometimes the route that seems the most obvious isn't necessarily going to be the best for the client. And perhaps back to Steve's point, this is where Google can fall down. Google will give you the obvious answer rather than necessarily the right one for personal circumstances. But what is on the horizon, if I divert slightly from the question, is a new consultation that's just come out in the last couple of weeks on earned settlement, and that is the government's new plan for people to get a permanent status in the UK. So at the moment, it's very much based on whatever category they're in. It takes X years, and most of the time that's 5 years, sometimes it's 3. And I mentioned that with each of the sort of categories I was referring to earlier. Unfortunately, the starting point that's proposed now is 10 years, 15 in some cases, 20 in some cases, with plus and minus factors. But some categories will be preserving their shorter pathways, and innovator is one, global talent is one. They should be able to stay at 3 years. Spouse should be able to stay at 5 years. So I think because of that, we're going to see increased interest in those routes for the clients where it's all about the long-term sort of permanent position. But there are some good news stories, and so high earners, back to the point around trying to attract the brightest and the best, and some of the things were commented on the budget around immigration and the sort of top talent. There are proposals that high earners should get that shorter pathway preserved. So those who are earning have taxable earnings, is the expression that's being used, of at least £51,000 may be able to preserve a 5-year path to getting settlement. But a new feature, which wasn't expected, is those earning at least 125,000 may actually be able to get settlement in just 3 years. And that may be whatever route they're coming on. So it's quite an interesting new model that looks at the whole rather than just route specific. So again, it's something of a watch this space. As a consultation running until the middle of February, but it could be that for some clients, particularly those at the sort of high talent, high earning level, there could actually be some real positives.
Great. Right, we don't have long left, so if we could just have a last bit of advice from the panelists and do a bit of a quick fire round. Chris, let's start with you.
I think this goes for speaking with anybody or everyone on this panel. Just speak to your advisors as soon as possible. Get everything lined up. If you're buying a property, or if you're moving to the UK, or whatever it is you're doing, just speak to advisors as soon as possible, and don't make impulse decisions without getting the correct advice first. We've seen way too many people buying properties outright because they didn't think they could get a mortgage, or they will, as Remy mentioned as well, use the wrong kind of agents and not actually get a feel for all of the properties that are available on and off the market. And yeah, and sort of buying in structures as well from a mortgage standpoint. Clients sometimes buying a structure without getting the correct tax advice or whatever. And even from Steve's standpoint, buying and not using the correct, I've seen with my clients, not using the best way to transfer your money to the UK. It can be so detrimental, and you can lose thousands of pounds by not getting the correct advice. So yeah, my advice is speak to the correct advisors as soon as possible before making any decisions.
I think that's probably going to be quite a common answer amongst everyone, but Luca, any last bits of advice from you?
Bring an umbrella. It does get quite rainy here in London. You are moving here, but beyond that, yeah, just a second Chris's point, it is about getting the right advice early on, and think that puts you in a good position. And we've spoken a lot about the complexities of investing in the UK and moving to the UK. Notwithstanding, there are solutions to that, and that's, you know, that is about getting the right advice and finding a flexible plan that works for you, essentially.
Yeah, you're definitely right about the umbrella. I left the house earlier and got about 5 steps out the front door and ended up going back to grab one. So yeah, I can't agree more with that. Louise, anything from you?
Yeah, I mean, I'm going to be saying get the advice before you do absolutely anything. So same as everyone else. I think, you know, just to sort of take that one step further, we see a lot of clients hold property in certain structures, trusts, corporations and things like that. And when there is a US person involved, that just gets absolutely horrendous. So that's another key sort of area of why you need to speak to basically everyone on this call to really understand what you're exposed to, and to avoid any sort of tax hell from doing things without getting the advice first.
Great. And Remy, from you? You're on mute. Yep, still on mute.
Hey.
Hello, can you hear me? Great. Okay, we'll try this again. Well, just to second what everybody said, but also I think it's no secret that London is very sensitive right now, and you know, the economy has suffered over the past 12 to 24 months, and it's been a very sensitive market. And you know, through sensitivities there are lots of opportunity, and I think there has never been a better buying opportunity in London in terms of value than now, due to sort of the traditional international demand we have had decrease. There's been a lot of opportunity, particularly in neighbourhoods that have sort of the prestigious postcodes, but have traditionally had the international buyers that, you know, are less reluctant to come here now. So I think there's a lot of opportunity in the market right now. There's, compared to some of the other big cities in the world like New York and Miami and Dubai, London looks very, very cheap. So I think that if you have a long-term view of London and you love spending time here, whether that's full-time, whether that's your summers, I think there's a lot of opportunity to get an incredible asset at a price that you probably will never be able to buy it again.
Yeah, I couldn't agree more. Steve?
Similar from everybody else, really, to be honest. I'd say that we're all here for a reason. Hopefully we're not too scary looking or sounding, so please do get in contact so that we can discuss further, just as everyone's circumstance is different, but we're all here for a reason and we all work quite collaboratively. We're in essence the team around most US clients when they're making the move, so start early and enjoy it. And you know, when you go and do the 3-month searching and you don't necessarily find the property straight away, that isn't a bad thing. That's part of the journey to find what you do like as well, but it's getting out there early and enjoying it as you go. But all hopefully approachable people, and start early. Yeah, that's it. Thanks.
Great, not scary at all, Steve. Sophie, last but not least, over to you.
Hopefully also not too scary. Obviously we're all echoing the advice point. I think I'd make one comment on that and one other one. On the advice point, the joined up component of it, I think is so important. You know, I may be saying to the client, spend as many days in the UK as possible to get an immigration advantage, and Louise might be saying, well, you need to watch your days in the UK because of these impacts, or I may be saying earn more income in the UK because that has an immigration advantage, and vice versa. So that joined up component, I think, is really important. But the other observation I'd just make is a kind of don't listen to the noise. There's so much negativity around the immigration piece at the moment. I think the world over, it's not something that's uniquely occurring in the UK, and a lot of that is around emphasis on sort of getting the numbers down. And whilst that certainly is there, the UK really is incredibly open for business and open for migrants, particularly in that top talent bracket. And I commented on how, you know, some applications can even be turned around in 24 hours. So there are some great routes and some fairly slick processes to be able to facilitate that. And there's usually a solution for most people.
Great, thank you. Right, so I think that's everything. We hope that everyone's found the insights today valuable. We will follow up with the recording of today's session via email. And if we didn't cover off any of the questions that were submitted prior to today, we will be sending some email responses as well. So yeah, great. Thank you, everyone. Have a good day.
Thank you so much.
Thank you. Bye.
Bye.